Most viewers hear Q2 2026 geopolitical settlement narratives around oil trade corridors and alternative payment routing and assume the story is obvious. It isn't. The headline sounds bullish or bearish on the surface, but the real move usually starts when the market reprices the hidden mechanism underneath it. This setup matters because what 1200 XRP could be worth before two oil corridor wins hit Q2 is not just a headline story. It can change the math for 1200 XRP faster than most holders expect. Stay with me, because the key signal is not the loudest one. It is the one that changes what happens next. By the end of this video, you'll know exactly which signal matters most and what it means for your next move. And I'll translate that into real XRP holder math with concrete upside, downside, and positioning scenario. Now pause there. The obvious headline would be oil. The real implication would be routing. That distinction matters more than most people realize. If two oil-linked trade corridors begin openly discussing alternative settlement rails in Q2, the market does not need full global oil adoption to react. It only needs enough proof that politically sensitive trade can search for speed, neutrality, and reduced friction outside old bottlenecks. XRP does not need to replace everything. It only needs to become believable in one serious lane. That is when repricing begins, because markets front-run credible optionality long before they price mature volume. Here is the setup. When I say two oil corridor wins, I am talking about two separate developments that make the same message harder to dismiss. Maybe one corridor normalizes non-traditional routing language in a high-pressure settlement discussion. Maybe another corridor or regional block signals willingness to test faster cross-border plumbing when the usual channels become expensive, slow, or politically exposed. Either way, the market reads both events together. One win is a curiosity, two wins create pattern recognition, and once pattern recognition starts, XRP is no longer being judged only as a retail token. It starts being judged as infrastructure optionality. That is why April matters. We are in the part of the calendar where Q2 narratives get priced before the full documentation arrives. This is the same reason regulation headlines, procedural pushes, trust bank rumors, and tokenization chatter can move sentiment well before final outcomes. Markets do not wait for certainty. When the upside of being early looks asymmetric, they reposition when the story becomes difficult to ignore. And right now, the story is not simply whether XRP is useful. The story is whether a utility narrative tied to politically sensitive trade corridors can return to the center of the conversation, just as the market is looking for the next real catalyst. Here is the first proof point people miss. Oil settlement is not interesting only because of size. It is interesting because of urgency. Oil-linked trade is the kind of activity where timing, liquidity access, and counterparty trust matter immediately. If a corridor even hints that it wants settlement options that reduce friction or bypass vulnerable choke points, the market starts asking which assets are built for bridge-like movement, speed, and global exchangeability. That does not guarantee XRP wins, but it absolutely puts XRP back into the shortlist in the minds of traders, institutions, and speculators who had written off utility as a distant story. That shortlist effect alone can reprice sentiment faster than most expect. Here is the second proof point, and this one raises the stakes. If two corridor wins hit Q2 talks, the signal is not merely that oil is moving. The signal is that the world is still searching for neutral rails when pressure rises. That is bigger than any single trade route. It tells treasury desks, macro funds, and institutional watchers that routing optionality is still unsolved and therefore still valuable. If that insight clicks for you, hit like now, because this is the moment most viewers usually realize the real trade is not the headline itself. The real trade is the re-rating of what XRP could be worth if routing becomes the conversation again. But wait, markets do not price all narratives equally. They price believable chains. So the chain has to make sense. Step 1. Two corridor wins make alternative routing look less theoretical. Step 2. XRP regains attention as a bridge asset rather than a nostalgia play. Step 3. Traders begin modeling not full adoption, but edge case utility with scaling potential. Step 4. Institutions and larger holders start asking whether underexposure to that possibility is the bigger risk. Notice what is missing here. We do not need instant mass usage. We only need the market to believe utility could matter sooner than expected. That is enough to shift price bands. So let us run the bag math cleanly. If XRP stays trapped in a low conviction range, say around $2 to $2.50, a 1200 XRP bag sits around $2,400 to $3,000. That is respectable, but it does not change behavior. If utility sentiment improves and the market starts pricing corridor relevance, the next zone is roughly $4 to $6. That puts 1200 XRP at $4,800 to $7,200. Still not life-changing for most people, but now it is large enough that your exit plan, tax planning, and position discipline suddenly matter. And that is before a true momentum re-rating even begins. Now here is where things get more interesting. If two corridor wins do more than create headlines, if they combine with better regulatory tone, stronger institutional curiosity, and a broader return of utility narratives, then a higher scenario opens. In that case, a zone around $8 to $12 becomes the one worth studying. At $8, 1200 XRP becomes $9,600. At $10, it becomes $12,000. At $12, it becomes $14,400. That is the range where a small to mid holder stops thinking emotionally and has to start thinking operationally. The bag is no longer abstract. It becomes a real financial object that can be mishandled. Now stop there again, because this is where YouTube usually goes off the rails. People jump straight from a catalyst to fantasy numbers. That is not useful. The more intelligent way to think about this is to separate believable re-rating from euphoric overshoot. A believable re-rating says the market starts to accept that XRP has live optionality in a world searching for faster, politically resilient settlement routes. A euphoric overshoot says that acceptance collides with momentum, low float availability on exchanges, and retail FOMO. Those are different phases. If you do not separate them, you will either underestimate the move or overstay it when the crowd gets irrational. There is also a downside case, and ignoring it would be sloppy. If these corridor narratives fade, stall, or turn out to be mostly political theater with no credible payment implication, XRP can remain stuck in a range while attention rotates elsewhere. In that case, 1200 XRP might stay closer to 2400, 3000, or maybe $3,600, even if the wider market remains constructive. That outcome would frustrate holders who confuse attention with adoption. So the discipline here is simple. Do not buy the story that every headline equals throughput. The real question is whether each headline makes future utility harder to dismiss. That is the threshold worth tracking. Now let us widen the frame. Why would institutions care at all? Because institutions rarely enter through the front door of ideology. They enter through repeatable use cases, improved legal clarity, and infrastructure narratives that other institutions can defend in committee rooms. If Q2 becomes a stretch where regulation improves at the margin, trust bank or custody narratives remain alive, and oil corridor discussions make alternative settlement look practical, then XRP gains something bigger than hype. It gains a defendable thesis, and once a thesis is defendable, larger pools of capital do not need certainty. They only need enough structure to justify a small allocation or a watchlist priority. This is also why the BlackRock chatter, tokenization chatter, and broader institutional rumor cycle matter even when they do not directly confirm XRP usage. They train the market to think in rails, settlement layers, and tokenized value movement instead of only meme cycles. That backdrop helps XRP because XRP performs best in a conversation about plumbing, not in a conversation about slogans. So if oil corridor wins reopen the settlement debate at the same time institutions are already thinking about digital rails, the narrative stack becomes much stronger. Suddenly, XRP is not asking the market for blind faith. It is asking the market to connect several already active themes. Here is the bottleneck though. For this to matter beyond a quick spike, the market has to believe liquidity, compliance, and execution can meet the moment. In other words, the story cannot be just that someone mentioned XRP near oil. The story has to become that faster routing, bridge liquidity, and cross-border settlement are back on the table in serious contexts. That is why 2 wins matter so much more than 1. 2 wins reduce the feeling of randomness. They suggest recurrence. And recurrence is what markets use to justify re-rating models. They start asking not whether this happened once, but how often it could happen again. Let us make this personal, because that is where most scripts fail. If you hold 300 XRP, then even a strong re-rating is likely more about learning and optionality than life-changing money. At $8, that bag is $2,400. At $12, it is $3,600. If you hold 1,200 XRP, now the math gets psychologically different. At $5, you are at $6,000. At $8, you are brushing $1,000. At $12, you are at $1,440. And if you hold 5,000 XRP, the same move becomes 2,500, 4,000, or $6,000. Comment with your bag range if you are comfortable, because the right plan for each holder is not the same. Here is the uncomfortable truth. A lot of holders say they want higher prices, but they have no idea what they would actually do if XRP moved from a story coin to a 5-figure position in their account. They have no trim plan, no risk plan, no tax awareness, and no framework for distinguishing first re-rating from final top. That is exactly why this topic matters. 2 corridor wins would not just change the chart, they would force holders to grow up fast. If your 1,200 XRP bag suddenly approaches the $1,000 to $1,500 zone, the question is no longer whether you are right to hold, the question is whether you are prepared to manage success intelligently. So let us resolve the open loop from the beginning. The hidden number almost nobody talks about is $8.33. That is the price where 1,200 XRP becomes almost exactly $1,000. Why does that matter? Because round number portfolio psychology is real. Below that level, many people still treat the bag casually. Above that level, the same holder starts thinking in terms of protection, reallocation, debt payoff, emergency reserves, and whether to let the rest ride. 2 oil corridor wins do not need to send XRP to some extreme fantasy target to change behavior. They only need to help push the bag through the first threshold that feels materially real. That is the real implication hiding behind the headline. The story is not that oil magically makes XRP priceless. The story is that politically sensitive settlement pressure can restore credibility to the exact type of use case XRP was built to serve. And April into Q2 is exactly when markets start testing those possibilities before broader consensus forms. If that credibility returns in more than one corridor at the same time, the pricing conversation changes from whether XRP has any utility to how much optionality traders are willing to pay for. That is a much more powerful shift than a loud headline with no chain behind it. And that is how I would think about 1,200 XRP right now, not as a lottery ticket and not as a guaranteed moonbag, but as a position with asymmetric sensitivity to a utility re-rating if 2 corridor wins meaningfully enter Q2 talks. If you want the follow-up on regulation, institutional positioning, and what 500 XRP or 5,000 XRP could look like under the next catalyst chain, subscribe now. The next few weeks are likely to be about narrative separation. Plenty of noise will show up. What matters is whether the market starts seeing recurrence, credibility, and routing relevance. If it does, 1,200 XRP may be worth a lot more than most people are currently modeling.